ChatGPT accomplished what AI assistants like Siri from Apple, AAPL, Alexa from Amazon, AMZN, and Hey Google from Alphabet, Google, were unable to. It initiated the long-awaited trend of artificial intelligence, AI. People are flocking to ChatGPT to get answers, whether they are trying to pass some of the most difficult exams or looking for stock recommendations. Furthermore, financial backers are jumping on whatever that says generative man-made intelligence in light of the fact that OpenAI, the organization that created ChatGPT, doesn't exchange on the stock trade. Consequently, which stock has investors flocked to ride the ChatGPT mania? Nvidia. Nvidia's first quarter fiscal 2024 earnings were released on May 24, and the stock surged 24% in a single day to reach the $1 trillion market cap. The stock rose from $305 to over $419, surpassing its November 2021 crypto bubble peak of $329.85. Even though the stock of Intel, INTC, and Advanced Micro Devices, AMD, both increased by 17.3%, neither company is even close to the height of the tech bubble. Behind Nvidia stock's 24% leap was the organization's bullish income viewpoint of $11 billion in the subsequent quarter, up 63% from $6.7 billion in Q2 FY23. Record-breaking demand for accelerated computing and generative AI will drive all of this expansion. Our entire data center family of products H100, Grace CPU, Grace Hopper Superchip, NVLink, Quantum 400 InfiniBand, and Bluefield 3 DPU is in production, stated NVIDIA CEO Jensen Huang in the company's fiscal fourth quarter earnings. In order to meet the increasing demand, we are significantly increasing our supply. The cost of these products is quite high. For example, NVIDIA H100 can sell for $40,000 on the optional market. Furthermore, NVIDIA's illustrations handling units, GPUs, rule the simulated intelligence GPU space. NVIDIA outperforms AMD and Intel's data center GPUs in terms of performance. Besides, NVIDIA has a background marked by meeting and beating its profit direction. It implies the standpoint is something to be bullish on. Is NVIDIA in charge of a technology bubble? A bubble is the result of a speculative frenzy in which asset prices soar to unsustainable heights, only to quickly and significantly decrease. Market behavior that trades assets at prices far above what they are actually worth is the driving force behind this cycle. The NVDA has increased by more than 150% year to date. This is significantly higher than the performance of any other large or mega-cap stocks over the past year, with Meta Platforms, Meta, coming in second with a gain of 119%. According to DataTrek Research, the S&P 500 would be down 0.7% YTD without the snapback in U.S. large-cap tech from deeply oversold conditions at the end of last year if gains in 2023 were not made in Apple, Microsoft, MSFT, Alphabet, and Nvidia. On Wall Street, there is a debate about whether there is a new tech bubble as a result of the sudden rise in tech stocks that may be related to generative AI. When discussing the shifts in AI stock prices, economist David Rosenberg stated, "No question that we have a price bubble," in an interview with CNBC. Rosenberg stated, "There are breadth measures for the S&P 500 that are the worst since 1999 in a recent letter to clients. 90% of this year's price performance has been contributed by just 7 megacaps." He continued, "You take a gander at the tech weighting in the S&P 500 and it ultimately depends on 27%, where it was going into 2000 as the dot-com bubble was cresting out and soon to turn over in marvelous design. However, according to Jeremy Siegel, an economist, it is not yet a bubble." Concerning NVDA, he said that the organization is a recipient of the simulated intelligence blast, and was a genuine, great organization with victory income. The future of Nvidia lets put aside the short-term bump and concentrate on the bigger picture. Nvidia is the organization that made GPUs, and these GPUs enabled information to perform simulated intelligence undertakings. At the point when no equipment organization was talking simulated intelligence, Nvidia was building use case situations for GPU registering. It rode the crypto rally first, then the PC gaming rally, and now the data center rally. The AI data center is moving away from using central processing units, CPUs, to retrieve data and toward using AI to generate data, where Nvidia's GPUs excel. Google's A3 supercomputer is a good example, with 8 Nvidia H100 GPUs and 1 high-end Intel Xeon CPU. This explains why Intel's and AMD's data center revenue decreased 39% and 14%, respectively, between January and March 2023. One of the applications is generative AI. Nvidia also has offerings in the Omniverse, such as Smart City and autonomous driving, where AI will perform tasks at the edge. However, that is a waiting opportunity. To put it succinctly, as everyone, from enterprises to cloud providers, pursues the AI dream, global data centers are upgrading from general-purpose computing to accelerated computing. Additionally, Nvidia has a complete AI infrastructure stack and an operating system that can be sold. In its 2022 Investor Day presentation, Nvidia estimated that the addressable market for its AI ecosystem was $1 trillion, with $300 billion markets for data centers and automobiles. Is now a good time to buy Nvidia, with prices down 10% from their all-time highs? Even if Nvidia looks good in the long run, I don't think now is a good time to buy shares. With a price-to-earnings ratio, P/E, of 195, the stock appears pricey. I believe that liquidity is being drained in the current economy by recessionary factors like rising interest rates and high inflation. Large-cap technology stocks' plans for expansion are unlikely to be affected by interest rates, but a recession could. As a result, I believe you can maintain a core position in Nvidia if you already own it and intend to hold it for the long term. However, now is a good time to book profits in some of your shares. And if you don't already own Nvidia and are looking for a good place to start buying shares, I would advise waiting and watching because a correction is likely.